Hi, I'm ggoernert, Vice President, Senior Investment Advisor at Canaccord Genuity Wealth Management and ggoernert Wealth Management. Welcome to the channel where we help you make some sense out of your financial world. Now today, I'm going to be joined by Canaccord Genuity Technical Analyst, Javed Mirza. But before we start off with that, just if you have any comments, please drop them on. If you want to see a sector that you'd like to see us cover, please drop in the comments. We'll take a look at it. And if you like what we do, please don't be afraid to subscribe. Anyways, let's turn it over to Javed.
Hey,
good morning. How are you? So thanks for joining us today. Now, you put out a report last week just talking about the potential upside breakout attempt from the consolidation in the market, and also you talked about a pullback in the technology names. So can we talk a little bit more about that? And then I'd like to get your thoughts on the U.S. dollar going forward here.
Yeah, perfect. So yeah, we put out that piece last week. Over the last couple of weeks, we've highlighted that information technology has been slowing down here. Now, just an important point, it's our favorite sector long-term for this secular bull market in equities, which we see having upside out into, call it, ballpark 2030. So long-term bullish, but at least over the next couple of weeks, we think that there's some further downside potential in the information technology sector. And we're also seeing some of the defensive sectors kick up, specifically utilities and staples.
Interesting. So, I mean, now that we're in the summertime, and I know we've talked about this before, but a lot of investors, when they look at the world, they look at the economy and they go, wow, this is terrible right now. Why would I even want to be in the equity markets to begin with? They have a hard time in their minds with that disconnect between a lot of economic uncertainty on one side and the rapid rebound in equity markets. Can you make any comments on that?
Yeah, of course. So back in March, we were very bullish on markets, and we talked about the potential in what we saw as a V-shaped recovery. And there was a variety of factors. I won't go into too much detail, but that ultimately has been what's played out. Now, I'll give you, I'll ask you a question. Greg, when you're driving, do you look ahead or do you use the rear of your mirror?
Hopefully, I'm looking ahead, and
that's what the stock market is doing. So the stock market's always looking ahead,
yeah,
and the data is always backwards looking. Okay, yeah. And so what I mean by that is you see economic data, GDP, housing, unemployment. That's always looking like at the last couple of months. The stock market is always looking ahead. So it's the same way as if you think about when you're driving. I hope you're always looking out ahead, and that's what the stock market's doing. It's always discounting the future. And if you recall, people don't talk about this as much, but back in February, the market started to go on this roller coaster ride. But things at that point, the economic data was strong. Mm-hmm. Why did it do that? Well, it foresaw, or the participants in the market foresaw, the potential dramatic downside from the COVID-19 pandemic.
Yeah. Now, the other thing you just brought up as well this week is you said that the U.S. dollar might be poised for a counter-trend bounce, because we have had some obviously the commodities, if you don't know, have been really, really strong over the past little bit, and a lot of that has to do with U.S. dollar weakness. So can we talk a little bit about how we see that?
Of course. So for those who aren't as familiar, commodities are priced in U.S. dollars. So if the U.S. dollar is going down, that's positive for commodities. The commodities, all else equal, will move up in price. And if the U.S. dollar rises, that's going to put downward pressure on commodity prices. So if commodity prices are going lower, if the U.S. dollar is going lower, then you're going to see commodities going higher. And that's what's happened over the last month and a bit. Just, people are concerned about the printing that's going on, the money printing, and the stimulus in the U.S. But it's funny because there's all this news over the last week on the U.S. dollar, on gold and silver. And in fact, in our view, this is typically the peaking point. So that's where, at least in the short to intermediate term. So we're very cautious on commodities. Something that we look at as well is the commitment of trader data, which just highlights where the smart money is positioned. And the smart money is typically the producers. They have the most information. They know their commodities inside out. Versus hedge funds. Hedge funds are actually typically seen as the dumb money. They typically jump on the trends at the last minute. And right now, the smart money is positioned very short in copper and lumber And so that's what we highlighted this week, is that not only the potential for a counter trend rally here in the US dollar, which if you take a look at any financial website, everyone's talking about US dollar to the downside. We're talking about US dollar to the upside. So that's our worry. If US dollar is going to rally here, then that's going to put downward pressure on commodities and commodity stocks, which have had a pretty good run over the last month.
Yeah, yeah, and you know, a lot of people don't understand too is you can get yourself in a situation where everyone gets on one side of the trade, and that's typically the time when you might want to be thinking about taking some money off the table on that side, at the very least for the short term on that. Interesting. So looking forward here, going into the fall, we've got the election coming up. Do we have any thoughts on where we should be positioned going forward, and how you see the markets playing out over the next 4 to 6 months?
Yeah, so just over the next couple of weeks, we're on, I wouldn't say red alert, but we're very heightened and very cautious here. We think that there's the strong probability that there's going to be a corrective phase in equity markets over the next month or two. But what that should do is set up equity markets for a strong finish to the year. So I have no view on the political outcome of the election in the United States. The market will tell us what the market participants are thinking about how a Biden victory or a Trump victory will play out for equity market.
Interesting. Okay, so looking at it right now, the sentiment out there right now is that we've got CBOE put call ratios that are in place. You're probably thinking that we're probably getting at the very least long in the tooth on the commodity side, at least in the short term. General equities probably want to be cautious on that side. So how do we position going forward with in anticipation for that kind of pullback?
Well, I think if you have cash right now over the next couple of weeks is king. And I'd be looking to deploy that into, we just started, our work looks at cycles as well. And from what we see, I'm sure people who somewhat follow financial markets know about the business cycle. And typically these business cycles last 3 to 5 years. Our work suggests a new business cycle has just begun. So that should be bullish for equity markets out at least into, call it 2022.
Right.
If that is the case, then I'd be using the weakness over the next 4 to 6 weeks to add exposure. And our favorite sectors, we've talked about information technology. That's definitely an area of the market I'd be looking to add. Interesting.
No, that makes a lot of sense too, because one thing, and I think you and I have talked about it before, the business cycle has 4 distinct phases. Sometimes recession stage is probably the easiest ones to pick out because everyone can look at it and go, oh, there. And I think we're in that stage right now. We're coming into the green shoots start of things. So on that basis, it's a long-term, 3 or 4 year trend, but there's going to be pullbacks along the way, and we just have to be smart about what we do. So anything else, and we'll just round it out. And I want to just thank you again for joining us today, because it's great to have you on the show.
Yeah, no problem. Yeah, it's, we'll chat regularly, I'm sure, but, we're watching stuff closely, and what we're always trying to do is look at and anticipate future trends. And so far, it's been a good year for us. So hopefully that trend continues.
Well, thanks again. Javed Mirza. Bye.
Perfect. Thanks.